here today with Brenen Hofstadter. Brenen is President and Supervising Principal of Generational Capital Markets Incorporated, a member of FINRA and the SIPC. They are a Dallas M&A firm that specializes in selling privately held companies throughout the U.S. and Canada. Welcome, Brenen.
Thank you, Chris. Nice to be here. I'm excited to share this very interesting case study.
Brenen was involved in a really complicated, challenging mergers and acquisition deal earlier this year, a two-part sale of WB Johnston Enterprises.
Well, I did, thank you. And this company has a very unique and long and interesting background. The business was founded in 1893, which was 14 years before the state of Oklahoma was founded. And our clients were the third and fourth and fifth generation business owners. So this is Mr. Lou Mybergen, who's third generation, Mr. Butch Mybergen, fourth generation, and Joey Mybergen, fifth generation. And so they were 5 generations. They're all active in the business, and it was our honor to represent them with the sale of their company.
And I understand you had to come up with a very creative strategy when, in fact, you went to market and sold the entire company, and this price came in at less than what the owners had hoped for. You then went and developed a new strategy in collaboration with the buyers.
When we take a client company to market, we always want to exhaust the marketplace and find the best strategic and private equity group potential buyers, both foreign and domestic. And we went through this process. We were able to generate about 8 buyer visits and receive multiple offers. The family's initial goal was to sell the entire business to one buyer in one transaction to maintain the name and the employees and the management team. And what we found in the marketing when we received our initial round of value and written offers from buyers is that certain buyers valued the grain operation more than they did the port operation, and other buyers valued the port operation higher than the grain operation. Mm-hmm. And just to summarize, over the last 115 years, the business had built up into really kind of 2 segments. One is operating grain elevators, where they're handling grain and wheat and expanded into frac sand and other different commodities, where they're receiving by rail and train various commodities for storage, shipping, handling, and trading. And the second part of the business, as Mr. Lou Mybergen had built, is a port operation. So they have 5 ports in the Arkansas River handling grain and also fertilizers and frac sand, pig iron, different commodities. So farmers that are out west and south were able to ship product to Tulsa and to other ports along the Arkansas River. And so what they had developed was a successful business, but really had 2 very distinct operations. And what the M&A process told us, and the buyer market told us, is that that some buyers valued one more than the other, and they had better culture fit and business fit with one versus the other.
WB Johnston Enterprises. They have a really long history and an interesting ownership. Can you tell us a little bit about the family and why did they decide to sell at this time?
Over the years, it had developed into a fairly large family ownership group. The 3 fellows that I was dealing with, though, that were the decision makers, and what they had learned is, while they were successful, that the agricultural industry had become more competitive, more global, needed larger banking resources, larger line of credit resources, and they had come to the realization that in order to secure the business future for the next 50 years, the next 100 years, it would be best to align it with one of these large multinational agribusinesses, and that's what we did. For the family, it meant they were able to be able to pay off all debts and be able to take all the chips off the table and secure their own family financial future for multiple generations to come.
When you looked at the market price and you found that you had wanted to divide this, you and your client decided ultimately to divide the company and sell it separately, sell the grain operations and the port operations separately. Did you have one pivotal moment during that strategy? Because you had to go back to basics, right, and re-strategize. Did you have one moment where you thought, that is it?
Yeah.
This is what we need to do.
There was a pivotal moment and an aha moment.
Uh-huh.
So the pivotal moment was when we received offers for the combined business. They were less than what Generational thought the value was, and frankly less than what the Mybergen family wanted.
Right.
And so I dialogued with the buyers, and in about a 2-week period, in working with primarily the CFO of CGB, the ultimate buyer of the grain business. He's a 35-year industry veteran, had made all of the acquisitions for CGB over a 30-year period. And he really helped me understand that the culture fit and business fit for them on the grain side was much stronger than the ports, and that perhaps, even though they liked the ports, they wanted to be in the ports, we probably need to go back, circle back with all the buyers, and find out who might have the best fit, most interest for the port side. And the aha moment came when I was with the clients and their attorney in Oklahoma City, and we were receiving offers for the separate businesses. And when Oakley made their proposal for just the port operation, it became very apparent from their interest level and their value and the business fit that this was the right strategy to proceed with.
Okay. CGB ended up buying the grain side of the business.
Correct.
And they're actually they're in New Orleans, but they're owned by 2 Japanese conglomerates. Isn't that right?
Correct. CGB itself was owned by Zeno and Atoshu. Mm-hmm. And those are 2 Japanese agribusiness powerhouses based in Tokyo, 200 plus billion revenue combined. And our client felt like aligning with a company that size would be real positive for Johnston. So why were those companies interested? Why did Zeno and Atoshu ultimately acquire our client? And what we learned in this process, CGB and Zeno and Atoshu look at traditional valuation methods and metrics like EBITDA and book value and real estate values in these things. But the most interesting thing for me, I always try to learn something in every deal, was that for Japanese buyers in agriculture, securing additional food sourcing and food distribution channels is on par with national defense as far as importance.
Interesting. Okay.
Why? Because Japan has a big population and it's a relatively limited domestic farming, and so they've invested enormous resources into securing relationships with farmers globally. And so acquiring WB Johnston was part of their 50-year plan that they're continuing to execute globally to secure direct food sourcing.
Brenen, are you thinking that in the future that we're going to see more opportunities with Asian companies coming in and investing in U.S. agriculture because of the need in their own marketplace?
Certainly, I would think so. Our clients have given us some referrals. We at the firm are reaching out to U.S. and Canadian agribusiness companies because we generated so much interest for WB Johnston. And I would expect that to be the case. Since we represent the seller, we're always going to market it to U.S. and Canadian and global buyers.
Right.
But certainly I would expect that their appetite coming from Japan and additional funds and acquisition appetite from China will be increasing over the next 10 years.
That's great. Now, when you did this deal, did you see any effect on the price multiplier?
In private transaction like this, we don't disclose price or the multiples, but what I would say is that finding the buyer that has the best culture fit is the key to be able to successfully do a transaction like this. And this was hard for a client. They wanted to keep the business together in one,
right.
and that was their initial goal. But fortunately, they had ears to hear what the marketplace had to say. And as a deal maker, so I've been doing this 23 years, I'd never split a business before. Never had to. But we were flexible enough to know that if the buyers are telling us, the buyer marketplace is telling us that this is the best thing for the business, our clients were able to wrap their head around it because of the valuations, but also they knew that they were aligning the right pieces of the business with the right businesses that had the right fit, particularly on the port side. Oakley, they've been working with hand in hand for years on the river, working with them, trading partners, a lot of employees and managers had crossed over the years. They had a very tight relationship. So for the port side particularly, this was the very best buyer. And interestingly, Chris, I had mentioned this. I went to the employee announcement where we announced to the employees the Oakley acquisition. And when I spoke to managers during that presentation and during those meetings, they said, Brenen, we are so happy that Oakley ended up being the buyer versus other options, because if we had to make a short list of the groups we'd want the Multiplier to sell to, Oakley was number one on the list.
Right, and now Oakley was a much more traditional sale. It was here, it was in Arkansas, and you're saying that you really were looking for a cultural fit.
In that instance, when the employees and managers are telling the investment banker and telling the clients, this is the group that we want at the top of the list, it was very clear that they were the right buyer.
They were.
And I'd say more traditional from an M&A standpoint as far as timing and getting through due diligence and closing. With the CGV and the Japanese-held ownership, we had extra steps like translating all of the documentation into Japanese and being concerned that it gets done right. Yeah. And so relying on expert translators was important. And also we found that the boards of those two companies were very stringent and very involved in our process. We had multiple questions come from the board in their final review that we need to provide real-time responses to for financial, legal, and operational information that we had to be provided and translated in order that we could get the transaction closed.
And now, CGV, was that your first M&A deal where you went outside of North America?
In the 23 years I've been doing this, we've done many deals with Canadian buyers and European buyers and even Asian buyers. It's certainly the first deal that I've done where we've split up our client company.
Right. And ultimately, that was a very creative strategy. Did it get for your client the target price that you were initially going after?
We don't disclose price, but I will say that our company valued it. Our client had expectations. By pursuing a two-pronged strategy, we certainly achieved their goals. In fact, I spoke with Butch Mybergen yesterday, and he said that they're very pleased with the transition.
Great.
It's going smoothly. They haven't lost clients or customers or any of these things like, horror stories you hear about M&A transactions. And the port side is going well as too. They have smooth interaction with employees and managers, and we're very pleased. Selling the business, representing the Mybergens is important, but equally as important, you like to see after the fact that the buyer and sellers are getting along,
That's right.
that they're integrating the businesses, and we're very pleased that that's happened.
And they're both viable, and they're staying, they're growing, and the buyers were happy as well.
Yep, very pleased.
Yep.
So, and we hope to be able to generate new deal flow. I'd love to work with CGV and Oakley again, and hopefully that'll happen.
Yeah. Out of this process, these two transactions, what was your big takeaway?
I always try to learn something and apply it to the next deal.
Right.
And the thing that me and my VP learned on this deal was we have a process and we have client goals, but be open to what the buyers are telling you. Be open to what the buyer market tells us. Right. Within reason. We still have to achieve certain value and certain deal structures that are what you'd expect, but if the buyer market's telling us in this instance, split it in two, that at least take time and energy and have flexibility with your clients. Unfortunately, in this instance, the Mybergens they understood it was the best thing, and ultimately it's showing to be that is the case.
Congratulations.
Thank you, Chris. I appreciate it.
Great deal.